Forex technical analysis for the pairs British pound US dollar and US dollar Canadian dollar. Analysis for British pound US dollar. In the Asian session, the British pound US dollar pair is showing back and forth movement above 1.2420 as the US dollar index struggles to find direction. Despite the absence of a potential trigger, a significant volatility contraction in the USD index is anticipated to lead to explosive moves in the future. Market sentiment appears negative with losses registered in the S&P 500 futures during the Asian session. While the 500 US stock basket futures have settled on a mildly negative note in the past two trading sessions, there has been elevated stock-specific action due to the quarterly results season. Investors are concerned that higher interest rates from the Federal Reserve will force firms to squeeze their revenue guidance. In addition, the declining loans and advances to consumers and businesses by U.S. banks after the banking turmoil are expected to put extreme pressure on the working capital requirements of firms. On the pound sterling front, despite higher average hourly earnings and double-digit headline inflation, the Bank of England is unlikely to pause the policy tightening spell due to the synergic effect. Sticky inflation in the UK is primarily driven by rising food prices, which have hit a fresh 45-year high of 19.1% according to the Office for National Statistics. This week, investors will be closely monitoring the UK March retail sales data, which is expected to contract by 0.5% compared to the acceleration of 1.2% reported in February. Annual retail sales would show a contraction of 3.1% against the 3.5% contraction shown earlier. If retail demand does contract, it would provide some relief to the bull policymakers. Analysis for US dollar Canadian dollar. Early on Thursday morning in Europe, the US dollar Canadian dollar pair approaches the significant 1.35 level, maintaining gains from the previous day and reaching a one-week peak. The loonie pair is supported by the decline in oil prices and the market's shift towards risk aversion, despite concerns over a full-blown conflict between China and the West and weakening consumer spending in the U.S. impacting market sentiment. The U.S. dollar index also benefits from the risk-off atmosphere, with New York Fed President John Williams endorsing a 0.25% interest rate increase in May to counter excessive inflation and restore price stability. Market participants are now placing higher bets on the U.S. Central Bank's 0.25% rate hike in May, while reducing the likelihood of a rate cut in 2023. Canadian data, including housing starts, industrial product price, and raw material price, have been disappointing, but optimistic remarks in the Fed Beige Book provide further support for the loonie pair. Comments from Bank of Canada Governor Tiff Macklem and Deputy Governor Carolyn Rogers will be critical, even though both are expected to justify the recent pause in domestic rate hikes, which could boost the loonie pair's value. Additionally, secondary U.S. data such as weekly initial jobless claims, Philadelphia Fed Manufacturing Survey, and existing home sales will be under scrutiny. Above all, risk factors and bond yields will play a significant role in shaping immediate U.S. dollar-Canadian dollar movements, particularly as the S&P 500 futures report the first daily loss in 4 days at around 4,168 and the U.S. 10-year and 2-year Treasury bond yields hover near 3.6% and 4.25% respectively, following the previous day's monthly highs. The US dollar-Canadian dollar pair has successfully broken through the resistance of the bearish channel, paving the way for it to reach our primary anticipated positive target at 1.35. This reinforces the expectation of further gains in the coming sessions, with a breach of the mentioned level potentially extending the bullish trend towards 1.3590. The 50-day exponential moving average underpins the price, bolstering the chances of additional gains in the future sessions. However, it is important to note that a break below 1.3410 would halt the current bullish momentum and push the price to test the critical support at 1.3350 before the next trend can be clearly determined. For today, the expected trading range is between 1.34 support and 1.3560 resistance. Thank you for watching this analytics. Our company specializes in providing signals for trading in all financial markets such as Forex, stock market and crypto. You can find the whole article at the link in the description. You can also like this video and subscribe to the channel.